Hello, everybody. Welcome to today's event, the Subcontractor CFO series, Optimizing Accounts Receivable. My name is Lydia Adams, VP of Marketing here at Billd, and we've got an incredible group of experts with us here today. It's my pleasure to introduce Luke Boyenger, owner of Cruzumi CFO and Advisory, who advises 20 plus best-in-class subcontractors across the country on finding past due AR and revenue that should have billed but wasn't. We also have with us our own experts here from Billd, Kelsey Stone, a relationship manager who owned and operated an abatement and demolition subcontracting business and now advises 30 plus Billd customers on project finances. And finally, we have Marcos Cordova, Director of Operations at Billd, who has protected over $1 billion in lien rights across 50 states and is an expert in operationalizing smart cash flow practices. I'm excited to hear from each of these thought leaders today as we talk about one of the most persistent challenges for subcontractors, and that's really accounts receivable that stalls and slips through the cracks and drags out your cash flow. What we're going to focus on is the proven processes to help you bill sooner, collect faster, and tighten your entire AR process. Playbooks from real construction finance practitioners that you can start using today. This session will have 3 parts. The first, we will talk about purely how to diagnose and evaluate your AR systems to really identify what's missing. In part 2, we'll talk about the fix, and we'll share solid SOPs that can be rolled out across your organization. And finally, in part 3, we'll talk about how to bring all of this together to your organization and create a cash forward culture. But before we get started, just a few housekeeping notes to go over. In your experience right now, you should be able to see the chat on the right-hand side of the screen. Go ahead and use that to let us know where you're calling in from, and feel free to chat with each other throughout the event. You'll also see a Q&A button on the side of your screen. That is the best place for you to put questions for us that you have throughout the session, and we will address those questions towards the end of the event, so keep them coming. All right, so to kick us off, we're going to go over our first part of the session, the diagnostic checklist to evaluate the strength of your AR systems. And for this, we have our very own Kelsey Stone. Now, Kelsey, first of all, thank you for joining us. I know that as a former business owner, you've had a lot of experience with this. So can you walk us through how compliance and administration really relate to billing and how to evaluate those administrative systems?
Yeah, sure. Hey there, Lydia. Thank you. Hi, everyone. I'm Kelsey Stone, and I'm really happy to be here talking about AR processes that create a cash forward culture. To answer Lydia's questions, compliance and administration relate to billing because they are the backbone of the billing process, as they ensure invoices and pay apps are accurate, are in compliance with the GC's required billing processes, are submitted on time, and all of this directly impacts cash flow. There are a couple approaches you can take to evaluate your billing process. And first, you can start by auditing your existing process by sitting through an actual billing process and also auditing prior billing processes. So you can poke the holes in your process to streamline and really build some efficiency and processes across the board.
Yeah, absolutely. Thanks for that, Kelsey. And this really sets the stage for this next phase of our conversation. We're going to go ahead and bring in Luke, who consults with subcontractors all the time. So thanks for joining us, Luke.
Yeah, happy to be here. Thank you.
Yeah, so, let's just say that you've evaluated your compliance process in the way that Kelsey has described, and you're really ready to bill. I know that you've diagnosed billing challenges for many different subcontractors. What do you look for when you're evaluating a new client's billing practices?
Yeah, there's a few questions that I like to ask when we're looking at billing in particular, when we first come into a new client that we're working with. Just some pretty simple things, really. Things like, is the monthly billing submission a process of prepared materials that are ready to go? Or does it feel like more of a paperwork chase down where we're ready to invoice today, but we don't have the documentation and materials in place that we need to be able to complete a billing application? Mm-hmm. Do we have a clear process around that? Is it working? But also just things like, are there consequences for project managers whose jobs are underbilled? Are there incentives for project managers who are overbilled or billed appropriately? What does that system and playbook look like inside the company, if it even exists, honestly? And just some numbers we like to look at. Things like, are we backdating invoices? Are we saying, hey, this invoice is 2 weeks past due, but actually not really. We backdated the invoice because we were late getting it out. We're hoping that their AP department will just pay it anyways as soon as they get it. Like, those are things you don't want to be gaming the system. You want to do it right so that you can track timelines and effective process appropriately. But also just some of your blocking and tackling fundamental things like managing your WIP report and understanding on a project by project basis, are we overbilled, underbilled, right on track, by how much, where you're assessing that regularly and it's impacting your billing process.
Yeah, absolutely. And another one that's here on the slide that I wanted to talk about was really the role of the PM. I think it's interesting that it's focused so heavily here. Why are PMs so important to this process?
Yeah, it's because PMs are the ones sitting closest to the job, right? They have the deepest understanding of what's really happening every day on that project, where we are from a cost perspective, where we are from a timeline perspective, who have we incurred costs from. Say we purchased materials, but we haven't received an invoice yet. Who is going and tracking down that supplier so we can get the invoice, so we can include it in cost, so we can bill for it. It's really hard for that process to work really well if the PMs are not connected at a detailed level to the billing process.
Yeah, no, definitely. And thank you for that. I think as we close out part one, which is our diagnosis section, we'll talk about everyone's favorite part of cash flow, which is collections. So, Luke, what do you look for when you're evaluating, a new client's collection process specifically?
Yeah, when it comes to collections, and again, this is like the most important thing, right? You don't want to let yourself start thinking, oh, we got the invoice out. Whew, okay, we're done. Good job. Everyone go pat yourself on the back. We haven't achieved anything until we've actually collected the cash. So collections is huge. It's super important. We never want to let an invoice slip through the cracks. So here we like to ask questions like, is there one specific person who owns AR collection on a job by job basis, or even just overall for the company as a whole? Somebody has to own it and understand that they own it, and that ownership needs to be tied to their performance level metrics in their job. And there needs to be an on paper process for what collections looks like. We don't wing it. We don't make it up as we go. We don't take it on a case by case basis. We know how our collections function, and we hold people accountable to that process, so that we have a system to track and document how we manage collections. And we're keeping our eyes on things like the AR aging report. How many jobs do we have in each bucket? And getting more detailed and saying, do we have aged receivables that tend to be with one client over another, one type of work over another, one project manager versus another? Looking for trends, looking for root cause issues so that you can flesh them out and address them.
Yeah, no, I think that's definitely super important. And as somebody who looks at, a lot of this stuff day to day, how do you decide, what normal AR aging looks like versus, what you would consider really a true cash flow problem?
Yeah, I mean, normal, if we think about it from like a textbook or perfect scenario perspective, it's nothing's past due. The only thing in our aging is current receivables. Nothing would be past due. That's not reality. That's not how things actually tend to work out. But technically, any past due balance is indicative of a potential cash flow problem, because we're pushing our cash conversion cycle out, extending the amount of time it takes us to bring cash into the business. And if we do that enough times at a high enough level, it will eventually cause cash flow issues later on. So it's more about an overall strategic approach than it is about reviewing one or two specific things on the AR aging. Because if we know that this particular customer, this particular GC that we work for is going to pay us 30, 60, 90 days late, we should have anticipated that on the front end from a billing and bidding and estimating perspective, because we know we've got cost of capital we're going to have to build into our bid now to cover the late payment we're going to get from this GC. So when we see it on the AR aging, it's not necessarily a bad thing or a red flag, because we already anticipated it on the front end. So it's more about the full system and strategy around your cash flow process in your business.
Yeah, no, that's very insightful. Thank you, Luke. So we've talked a lot about how to identify these gaps. Now, really the next piece and part 2 of our session is really about installing SOPs that are very actionable. And we have several to share today. We're actually going to start with Kelsey on creating contract abstracts. So Kelsey, can you walk us through how to create a contract abstract and really the results that subcontractors can expect when they implement this SOP?
Yeah, sure. So as you all know, subcontract agreements and prime contracts are quite large. I mean, like a Harry Potter book, sometimes larger, and contain very important information that can significantly impact your success on a project, and more especially cash flow. I hate to be the bearer of bad news, but as you might as well forfeit margin right off the top if you're not willing to read the contracts and identify all administrative and compliance requirements. Eventually, I grew the business to a level where we were running 7 to 9 projects a week, and it became really hard to keep track of each contract's billing and compliance requirements. So I adopted a lease abstract from my retail asset management days, and I updated it to apply to construction contracts. This is an Excel document that I formatted and used as a template to utilize on every single project as soon as a contract was given to me to review. Now that's before even signing it. I would get ahead of it then because there's another point on being able to negotiate some items in regards to front loading some expenses, but we'll get to that later. And so anyhow, formatted it according to the project, and then the contract abstract included items such as, it mirrored the table of contents. So you'd go through project address, who's the owner, who's the GC, when's the estimated start date, what crew are you putting on this, and super and foreman, things like that, as well as billing requirements, critical deadlines, critical terms and conditions, your scope of work. And I see the contract abstract more as a Cliff Note version of your contract, and you briefly explain all of these very important items and clauses within the contract, and then cite exactly where you can find that and expand on that language in the contract. For example, Section 5AB says, billings due on the 20th of every month through Procore and will not be approved without, these compliant items. And so with that, there's an immense amount of value that I found in doing that because it forces you to read the contract. They are very long, and I know more often than not, they're not looked at in great detail, and they're not pulling these specific requirements that will affect your billing processes, and at the end of the day, your cash flow. When you have a non-compliant pay app, then you're basically putting that off into the not approved pile, and your pay app's not getting submitted with that draw. So there, you might as well add another 30 days to that billing right there.
Yeah, which it was frustrating, right?
Yes.
Yeah, no, I think it's a great path forward, for folks on this call. I'd love to bring in Marcos actually, because, I really want to talk about SOP implementation. Like, Kelsey, what you were just saying is there's just a lot of moving parts, right? And Marcos, you implement a lot of SOPs here at Billd, and it really has to become kind of a part of a company's DNA, So maybe share with us, in your experience, what's the difference between an SOP that really gets followed and then one that doesn't?
Yeah, great question. In the simplest terms, keep it simple and get buy-in, right? Simple equals scalable. A great SOP shouldn't be complex. It's easily repeatable, and it should be built to scale as you grow. The more complex you make it, the harder it gets to follow as you add volume to it. You also want to ensure that you stress test it. You don't need a committee to build a process that can actually convolute the whole thing, but you do need your team to stress test it before it goes live, and have them provide input and feedback. This then creates ownership. What Luke was talking about, if nobody owns the process, it's going to get lost in the shuffle. So when the team feels included and they provide input, they aren't just following another order. they actually own the process. So since they're the ones executing it, their buy-in is your biggest asset for sure, and that will make a successful SOP.
Yeah, definitely. And I know we're going to talk about a couple of SOPs, so keeping that in mind as we go through the rest of these. So thank you for that, Marcos. Definitely want to dive in just a little bit more too, Kelsey. I know you mentioned a lot of this previously, but let's talk about what's actually included in this contract abstract, and what exactly subcontractors need to do to get this going.
Yeah. So the contract abstract pretty much mirrors the contracts table of contents like I mentioned earlier. So you're going in chronological order of the contract, highlighting specific items such as project start date, job number that's going to be required on all your submittals, and then down into the nitty gritty of insurance requirements. Are you required to enroll in any type of insurance reporting programs, like a lot of the big, like top 20 GCs require? You'll want to go ahead and get enrolled in that. And then there's other things like billing codes, billing instructions, including, if you're going to be using Procore, Textura, or GC Pay on this, or are you simply emailing your billings to a specific, billing email for the GC? It also includes items like if the project requires certified payroll. It includes our scope of work. It includes exclusions. That's a big deal, especially when you're out in the field and, you're met with who owns this. Then it's very clear you've identified the exclusions because they're in the contract and everyone's agreed to that. And then it also can reference the plan sets that govern the project. You could have, someone looking at a past revision, and if that's what you're managing your project off of, then you can be screwed if there's material changes, especially in your scope of work, whether they said exclude it or include it. That could be the difference of a wall staying intact or a wall coming down, in my experience. And that's you don't want to go down that route. So identifying exactly what is required of this contract, pre-con efforts, submittals, all of those things. And you also want to notate not only where can you find that in the contract, but like Luke said, you need to have ownership. Who in the company owns these fields? For example, like the insurance requirements, certified payroll, billing instructions, that's going to be for your project administration and accounting controller side of the team, right? Or side of the house. And then on scope of work and submittals, that's going to be more on your project management and estimating side. So you need to define who owns all of this stuff to even get this project ready to go for us to mobilize, and a deadline on that as well, and review it with your team. So everybody's on the same page. You can divide and conquer and really, really be completely ready and confident to start that project and mobilize on time.
Yeah, and I keep hearing this theme of being ready, pre-planning. So, I really like that we're talking about front loading the pay apps alongside the contract review. Maybe talk a little bit more about why it's so important to identify these opportunities early on, and especially while you're looking at the payment terms.
Yeah, I think one of the biggest stressors is we all know that it takes an average of 56 days for you to get paid after you've submitted a pay app. And so we know that is a known issue. So how do you get in front of it? Well, that could be front loading some soft cost, like your overhead, mobilization, bonding, especially if there's a P&P bond required, drop your premium in the schedule of values. And whenever you're building that contract abstract, you can go ahead and roll right into drafting your first pay app and building your schedule of values with your team. You will need, your billing administrative team will need to work alongside project management in order to successfully build that out, because there are certain project codes and certain breakout of items that your project manager and estimating team are going to know exactly how to break that out and how to identify the cost for that. And so if you can go ahead and work in front loading costs, if it's not something that is approved yet, you haven't signed the contract, I would highly suggest that you go ahead and ask the GC, is this something that we can consider? And as I feel like in my experience, if you back that up with like matter of fact data, like we're speaking of now, like, hey, this is how it impacts my cash flow. This is how it's going to, impact, offsetting my retainage. If you can get that approved ahead of time, if it's not already a condition in the contract, then you're already setting yourself up for success. Front loading covers your early expenses. It reduces the need for you to pull a lever from your capital stack, and it helps you manage slow paying customers early on. And like I said, before I signed a contract, I always asked can we get these front loaded costs approved? If so, I want to get included withdrawal one and hopefully get paid quicker on my startup cost.
Yeah, no, I love that. And I think that's important, thinking about, how it's repeatable and makes a huge impact to the business. And so, this is a great, SOP. I think, let's say now that the paperwork is really buttoned up and the contract terms are distributed to the team, it's really time to get to work and start billing. And Luke, I'd love to bring you in at this point, because I know that you have one of the most airtight billing processes that I've ever seen. So maybe you can walk us through that as kind of the next step.
Yeah, I think, as I said earlier, having a really well defined and well thought out billing process is critical to timely billing, which proceeds timely collections. So it's something that's worth spending some time on. And just at a high level, the way I like to think about billing is in a weekly process. You don't have to wait till the last day of the month or the first week of the month or whatever it is to try to push all your billing out at once. Have a weekly process where we're billing everything we can bill on a weekly basis, which speeds up collections and eases the burden of having to try to do it all at once. So I think about a weekly billing process and kind of these 5 steps. And it's not that these are 5 magic steps. Your process could look different depending on the team you have in place, the roles you have, and what you don't have, the type of work you do. So this is more of a generic process that yours could look something like this, where on a weekly basis, there's a meeting between CFO or controller with the PMs to conduct a WIP review. We want to be looking for projects that we're underbilled on. Where are scenarios where we have work completed, challenging percentage of complete, looking at billable milestones. The whole point is trying to identify anything that we have a legitimate case to bill for, because we want to bill as soon as we can. By day 2 of that cycle, you want to have accounting prepare the draft invoices. 48 hours later, PM should have either approved or revised those invoices. And then no later than day 5, accounting issues the invoices. So we've got our weekly billing process right there, where upon submission, accounting can update the billing dashboard so that we can all track progress in our billing cycle as well. Because we want to be seeing work completed, invoices issues, unbilled balances, and really be tracking at a pretty detailed level how our billing works.
And one of the things that I think is really obvious here on the screen is the time frames, right? So it turns out that there's specific dates, time frames. I imagine this kind of ties back to that whole paperwork chase down that we talked about earlier. So maybe speak to that and specifically, like, why do we need to stay to this tight timeline?
Because if we don't have a standard that we hold people accountable to, then we can't drive change or progress or predictability in our billing cycle. It just becomes this, everybody do what you think is right. And if you want to follow the process, go for it. But if you don't, it's okay. And it just doesn't work. We have to have everybody on the same page, held to a consistent standard that they have been trained on and that they're held accountable to. Because if we don't have all those pieces in place, we've built a process that's going to maybe work sometimes, but not all the time. And if it doesn't work all the time, it's not predictable. And if it's not predictable, then we have cash flow that's really hard to forecast and really hard to manage.
Yeah, no, absolutely. And obviously you've implemented this with several clients. So I'd love to hear you brag on yourself just a little bit here about, what are the results that you've seen by putting this out there across several different companies?
Yeah, I mean the whole goal is cash flow, right? It's not about putting together the single greatest SOP to put in the Construction Hall of Fame and pat ourselves on the back and say, look how good we are at writing. The goal is cash flow. We want to put money in the bank. And so if we talk about the impact of doing this, the impact is invoices go out sooner, the risk of rejected invoices goes down, and we get cash in the bank sooner, which improves our cash conversion cycle. It improves our cash balance. Everything about it is better from a cash flow perspective.
Yeah, absolutely. And I mean, this is obviously, a great place to follow for billing. I would love to take us to the next step, really, which is to bring in Marcos, who's our resident lien expert here at Billd, because once you've billed, you really want to protect your payment rights and make sure that you have that leverage just in case something goes wrong. So Marcos, maybe walk us through that SOP regarding pre-liens and what you suggest there.
Yeah, for sure. So pre-liens are one of the most important things you can utilize to protect yourself in the event of non-payment. And this actually starts before you start billing. So you want to create a nice flow that's set it and forget it. I do want to preface this whole conversation that lien laws are complex and they vary from state to state. So while I can give you a nice, framework that you can utilize today, it's very important that you understand the states that you work in and the specific lien laws for those states. So the common theme here, right? Designate a lead. Who's going to own it? Assign a clear owner for this. It's typically your AR team, and they're going to work hand in hand with your PMs. They're the ones that are involved with the billing. The PMs are closest to the job, so those two work well together and will ensure that you have what you need to send the pre-lien. Know your map, right? Again, understand the lien laws for every state that you work in. If you're in one state, it's nice and easy, but I know a lot of contractors work across various states, so it's important to understand those. More importantly, you want to check up on those every year. Set an event every year to just kind of take a dive in to see has anything changed. Now, while lien laws don't often change, they certainly can, and they do, so it's just important to stay sharp there. The next piece would be create an execution checklist. Once the contract is signed, sync with the PM. You're going to want to gather some pretty important information that you're going to need on these pre-liens. Things such as first furnishing date. This is exactly when labor and materials hit the job site. This one's important because that's when your pre-lien clock starts ticking. You want to ensure you know that first furnishing date. You also want to understand the stakeholder info. Who's the owner? Is there a tenant? Are the owner and tenant the same? Who's the GC? This is important because all parties need to receive this in order for you to keep your lien rights intact. Designation between owner and tenant can get a little tricky, right? If ABC Holdings owns the whole parcel, but you're doing work for, say, Starbucks, you want to ensure that you list both of those. Project address. This you have to be very specific on. Again, let's take a large shopping center, but you're doing work on that Starbucks. Well, you want to make sure that you're isolating exactly where that improvement is being made. Also want to try not to confuse it with the staging area. If the staging area is what's listed in your contract, be sure that you understand where the actual improvements are being made so that you can state the correct address on your pre-lien. The other piece of information you want to get is the project type. Is it public or is it private? This changes the rules significantly. So you got to understand if you're working county, state, federal, like Kelsey did a lot of work on, you're on a public project. If you're doing work for ABC Holdings, you're on private. And again, understanding those nuances between the two in your specific state is very important. Set a 10-day rule. Pre-lien deadlines vary all across, right? Anywhere from 10 days to 45 days to some states don't even require them. But if you set a rule that 10 days after first furnishing, we're going to automatically send these, you can set it and forget it. You ensure you hit your deadline and you don't have to worry in the event of non-payment, oh, did we get this out? So make it the responsibility of that team. And when something gets kicked back, maybe you don't have lien rights because you forgot that pre-lien, you know exactly who to hold accountable for that. And the last thing is clock awareness. Just like you need to know when you start your project so you can send that pre-lien, the second most critical timeline you need to know is your lien deadline. Typically, this starts the last day. When you finish your scope of that project, that's when your lien deadline clock starts to tick. So you got to understand that. Again, there's nuance around that, but the safest bet and the most conservative approach is just to understand when you're done with your scope on the project. So that said, there's a lot of like tidbits in there that are super important, and you don't want to get it wrong, and it's super important to get them right. Fear not. There's a number of lien service providers online that do this for you. That said, the more information you can give them up front, the better you can equip them. They can compile that information. If you don't know who exactly owns the parcel, they can pull that search for you. So work hand in hand, but also be super organized and get them what they need when they need it.
Yeah, no, absolutely. And, you know, something that I've heard come up, right, is that if I do this pre-lien, is that going to step on my GC's toes, right? And I think you're the perfect person to ask this question to, because you are the expert in the liens, and then you're also kind of have worked on the GC side. So what would you say to a subcontractor that's, you know, kind of concerned about their GC's perception of a pre-lien, and how can they kind of mitigate that?
Yeah, that's a great question. And that's one we hear all the time. I don't want to ruffle feathers. We
Yeah.
get it. Your relationship with your GC is super important. However, be upfront, right? Tell your GCs from day one that you protect your lien rights. Sophisticated GCs see this as standard business and not a threat at all. So just have the conversation and have it early.
Yeah, no, that's good advice. And obviously you've kind of seen this, you know, over several years. What is an example, or what have you seen that has really shown the impact of, you know, filing a pre-lien, and, you know, kind of shows why subcontractors should do this every single time?
Yeah, there's a number of horror stories out there that I can speak to, but definitely the common theme on this is we didn't send a pre-lien. So now here you are in the event of non-payment, you perform potentially $1 million worth of work that you've earned, that you're owed, but you don't have rights protected because you didn't want to spend 30 bucks and 30 minutes to send the pre-lien out. So create this process, right? Don't trade a simple process for an expensive, drawn-out legal battle. We've seen it too many times. You don't want to go down that road.
Well, thank you, Marcos, for that.
Yeah.
And, you know, for our last SOP, before we jump into how to get these implemented, I'm going to go ahead and call on Luke. So, Luke, can you talk us through, you know, this collections process that you use with clients, and kind of how that has made an impact for them?
Yeah, you know, kind of the theme of the day, it goes back to having a clearly defined process and following it, and not just winging it. And collections is the same thing. You don't want to wait until an invoice is past due before you start trying to figure out, okay, what are we going to do about this? We want to have a process in place up front that we're already following from day one. And I think a good example of what that process could look like is day 3 after sending the invoice. Accounting simply reaches out to confirm that the invoice was received. What you don't want to do is find out 2 weeks later, oh, we never got your invoice. And you're like, okay, I don't know why that doesn't make sense, but I guess we'll send it again. Now you're 2 weeks behind on collection already. So confirm the invoice after you send it. 5 days before the invoice is due, have your accounting team just send a pre-due reminder. Hey, your invoice is due in 5 days. Looking forward to receiving your payment. Simple. On the due date, have the PM reach out. Just say, hey, looking forward to getting your payment today. Once we get to the point where we're 30 days past due, we need to be escalating collection of this invoice and looping in our controller to contact the customer. A lot of the times, what you don't want to do is have your AR person contacting their AP person and having this back and forth about whether or not the invoice is going to get paid, because you've got 2 people who don't have any authority debating whether or not money is going to change hands. We need to get up to the level of people who are actually making these decisions about what gets paid and when. And for a lot of companies, that's their controller. So usually just escalating it to the controller will get it moving. But if we get to 60 days, I'm bringing in ownership and CFO and escalating this with the customer, trying to get this invoice paid. And on a weekly basis, you want to have accounting update a collection status report with PMs reviewing project AR statuses in a collections meeting, so that stuff is being tracked, it's being progressed, action is being taken. We are doing everything we can to get cash in the door.
Yeah, definitely. And I like this idea of, moving it up the ladder as time progresses. And I think you explained that really well. And then Marcos, I'm going to tag you in again as our GC expert here, because I know that a main concern with a strong collections process can also be that feeling of, fearing that it's going to harm that relationship, right, with the GC. So, when you were with a GC, how did you react to this type of a collections process, and what do you think is some good advice there?
Yeah, no reaction. Again, this is all common in the construction. Never bothered by them. Protecting yourself doesn't hurt a good relationship. Strong GCs protect themselves the same way against owners, right? So be upfront, do great work on time, and you shouldn't experience any issues there.
Awesome. All right, well, that concludes our SOPs part of the presentations. So really now we're gonna, in part 3, talk about the implementation and really the leadership side, the cultural buy-in, how to get everybody rowing in the same direction. So we'll go back to you again, Luke, on this one. The average subcontractor is really focused on, winning projects, and cash flow can really be looked at as secondary. What are some messages that you like to drive home when you get a new client in this area?
Yeah, it's just getting everyone focused around the idea of why we're in business in the first place, and recognizing that while we really care about doing great work and building awesome things, and construction is awesome because of these cool projects we get to do, and that's all fantastic. But if you only cared about that, you would have started a nonprofit, and you didn't. You are a for-profit business because you want to earn profit, and you want to earn profit because profit turns into cash. We are in the business of generating cash flow. And everybody in the business needs to understand that that is the underlying goal. And everything we do is built and designed to produce cash flow in the business. We have to set that tone at the very top of the company and push it down all the way to the lowest level employees in the business. Or we lose sight of the goal and we start focusing on the wrong thing, like bad revenue growth that doesn't translate to profit and cash flow. We have to keep our focus on the thing that really matters, which is cash flow. The job is not done until we're paid. And we celebrate collecting cash as much as we celebrate winning a job, because a lot of businesses, they'll celebrate winning the $5 million contract, but then they don't celebrate when they actually collect the profit at the end of the project.
Yeah, no, absolutely. And, I think the culture is a really important piece, and then we start to think about kind of like the CFO and the owner and the different roles. And so it's important, obviously, to have the owner 100% bought into this. So I'll ask some questions here on this part. Luke, obviously this first step is to figure out what the owner's goals are. In your clients, work with your clients, why is that so important specifically for a CFO to have that communication and to understand?
Yeah, I mean, as a CFO, we're spending a lot of time and effort doing analysis to understand what's working and what's not working in the business, so we can drive the progress that we want to see in the business. But so often it requires the buy-in of the owner to implement and enforce the progress that we want to see. And if we aren't connecting the changes that we want to make in the business to the goals that the owner has, it's going to be way harder to get them committed to helping you implement those changes to drive the progress that you want to see. Because it just feels like, oh, my bean counter is unsatisfied with something that I don't care about. You want them to feel, oh, if I don't do this thing, then I'm not going to get this goal that I have for myself personally. And when you can connect those dots, they're much more likely to take the action that you want them to take.
Mm-hmm. Yeah, it makes a lot of sense. And, Kelsey, as having been that owner, you want to be able to see, right, the vision outside of just the numbers. So how have you seen this work for a CFO to not just talk about the numbers, but go beyond the spreadsheet and see that impact?
Yeah, I think the difference between the CFO and the CEO or owner here is CFO's qualitative, right? I mean, quantitative, and your CFO owner is qualitative. And I'm a big fan of Simon Sinek, and he presented and wrote a book on the what, how, why. And so I went through that practice pretty rigorously on my end to build my what about my business. You know, it's abatement and demolition, right? And it's how are we going to execute it? And then why are we even doing this? And that's where it gets a little personal. And so as you're, moving on from the what, your how, in my opinion, is your CFO. How are we going to get there? What needs to be true? What needs to be happen in order for us to get to, say, the owner wants to be a $10 million company, if that's one of their main goals, or the owner wants to sell once they're valued at a certain number, right? And the CFO can back into that goal as to what needs to be true in order to achieve that valuation, right? And that's just one example. And so the owner and the CFO need to be like besties in the company.
Yeah.
Because the CFO is going to execute. They're going to provide for the how are we going to get there. And the CEO is always maintaining that goal of the why, right? Mm-hmm. And so it's just a matter of setting that in place of those qualitative and quantitative measures and criteria that merge and really create that synergy between the two roles as the main leaders and the main the main two at charge, leading the force up and growing.
Yeah, no, absolutely. And finally, last question on this, really, Luke, if you can walk us through how you can use cash flow forecasts to potentially bring the owner around to your point of view if you are a CFO, and kind of how you're aligning that to the goals that the owner has. I am having trouble hearing you, Luke. I don't know if anyone else is.
Oh, sorry.
That's okay. Maybe just start that one over.
Yeah, no, I was just saying it's about scenario modeling, where the cash flow forecast is a super useful tool that lets you present different options to an owner, where you can say, if we stay exactly like we are today, this is what cash flow is going to look like over the next 12 months. Whereas if we implement this change that I want to implement, this is what cash flow looks like over the next 12 months instead. And you can show them in real tangible numbers, hey, we're going to produce another $250,000, $300,000, $400,000 of cash flow over the next 12 months. If we do this, now you can take that $200,000 distribution that you wanted, put a down payment down on the house you wanted to buy. Whatever that goal is that they have, you're connecting their goal to cash flow, to the change that you want to make, so that they will actually take action.
Mm-hmm. Yeah, no, that makes a lot of sense. And thanks for all of that explanation, team. I think last but not least, we're going to talk about the PM role, because as we stated earlier, it's really important to this whole cash flow initiative. So Luke, I'm going to let you close us out here and talk about, why PMs are so important to this process.
Yeah, I mean, PMs are really the tip of the spear when it comes to the whole AR billings collections process, because again, going back to what we said earlier, they're so connected to the detailed level of the job and really understand where we are and what's going on. So, a couple of things that I think are important to do for PMs in your business is, one, update your PM's job descriptions to include collections of cash flow. Because a lot of PMs think that, oh, I'm being looped into the billing process, somebody else must not be doing their job, and now I'm having to do my job and theirs. And you don't want that. You want them to understand from day one that collections, invoicing, billing is part of their job. It's part of their responsibility. It's not them picking up the slack for somebody else not doing their job. You want to shout out top performers, team-wide meetings, give credit where credit is due, when your PMs are doing a really great job. Send out a bi-weekly over-under build report by project manager to drive the competition that Kelsey talked about earlier. People really respond to that. Mm-hmm. And tie the project manager compensation to over-under billing, where they get bonuses and incentives for timely billing and not having projects behind on billing, because that creates negative cash flow, which hurts the business.
Yeah, and I love this idea of them being the tip of the spear. And I don't know that that's so widely done or has historically been done. So, why is it? Do you think that they've maybe not been seen this way in the past? And why is it that really PMs are that important piece to the puzzle?
Yeah, I think they haven't been seen that way in the past because a lot of construction companies just don't operate that way. Where PMs, it's not built into their job description. That standard has never been set, and there's this constant frustration that PMs feel like they're having to do stuff that they aren't supposed to have to do. It's important to, I think, especially in the construction industry, sometimes you just have to ignore what everybody else is doing. Because the reality is the statistics around construction companies that go bankrupt is staggering. So you don't want to mirror all the other companies that are going to go bankrupt in the next 10 years. Stop, pause, think, do what actually makes sense. That's going to drive the progress and the cash flow that you need to see in your business to move forward.
Yeah, absolutely. And last question here is really that concept of tying compensation to the billing specifically for this role. Why do you feel like this is an important piece? And what are some results that you've seen by doing so?
Yeah, it's just that incentive drives action, right? And you don't want to just create a rule that may or may not get followed because there's no accountability or incentive attached to it. You want to tie compensation to it, and you'll see it impact your cash flow. Because like we talked about earlier, if it's just a rule with no consequences, it may or may not get followed. Sometimes it will, sometimes it won't. It'll be inconsistent. You'll be frustrated. They'll be frustrated. It doesn't work. We tie incentive compensation to this because it's critical to the business that it happens. And therefore, we want to incentivize people to actually.
Well, thank you, Luke. With that last way to implement these SOPs. And before we jump into the Q&A, I just wanted to take a second to talk about the companies behind today's event. Billd is a financial services company built for commercial subcontractors. For the last 8 years, we've been the champion of the sub and have worked with over 1,500 subcontractors to help move their businesses and their projects forward. And Cruzumi is CFO and advisory, is Luke's fractional CFO firm, specifically for construction companies as well. His team, as you heard earlier, helps owners solve profitability and cash flow challenges to really build that financially disciplined, scalable business. Now, we've launched a couple of surveys. If you look to your right, some of you have been putting questions in the Q&A. Thank you for that. There's also a polls tab. So if you're interested in hearing more from us or you want to speak to somebody about either of these services, you can just click yes, and we will get in touch with you. So now we are going to get into our Q&A, and we're going to go ahead and start with, let's see. Let's go ahead and start with Luke here. So there has been a lot of talk today about billing. I wanted to kind of hit again on overbilling. So, how much is too much for overbilling, and how do you protect GC relationships?
Yeah, it's a great question. And it's really almost more of a legal issue than a strategy question, right? When it comes to billing, your project, your job should be governed by a contract. And if that contract is a good contract, it should pretty well describe billing terms. Like, it's usually pretty well laid out. This is when you can bill. This is how you can determine how much you can bill. It's usually pretty clear. So the goal isn't actually to be in an overbilled position. The bill is to have billed everything that we are legally allowed to bill, in which case we're not overbilled or underbilled. We want to bill everything that we're allowed to as much as we can. We don't want to take advantage of the GCs by being in an overbilled position. And it's probably technically not in line with the contract anyways if we do that. But we also don't want to leave money on the table by not billing stuff that we have a legal right to. So it's kind of about trying to do the best you can to hit that on the head, and let's bill everything we can.
Yeah, no, I think that makes a lot of sense. And I do see a question here, which I think is really relevant about roles and responsibilities. We have talked about the CFO and the owner, and we kind of mentioned the controller. But this individual has said that, they don't have a controller or even different departments. Everybody kind of wears different hats. And so what advice, Luke, do you have in this scenario where there's not necessarily those distinct roles and who should do what in that case?
Yeah, I mean, we're talking about a smaller construction company in this scenario. Someone who's probably sub 10 million, maybe even sub 5 million in revenue. And it's a different scenario when you're at that stage of business. The one thing I would say is you're not going to have 10 people in different roles where you can assign this out to 10 different people and have this big team that works on it. That's not going to be true for every construction company. But what is true is that there are certain fundamental tasks that need to be completed at a regular cadence within a well-defined system and process playbook. And who owns those tasks needs to be consistent. So the challenge in the scenario that was described is that there isn't a consistent person doing it.
Mm-hmm.
It shuffles around. It might be this person, it might be that person. It's a structure of chaos. You have to bring structure and organization to the team that you have, even if it's only you and one other person. There still has to be structure, there still has to be system and process and control and who owns what, so that it gets done consistently and there can still be an element of accountability to it, even if you only have 2 or 3 people to allocate those tasks across instead of 7 or 8 like a bigger company would have.
Mm-hmm. It's more about knowing who does what and making sure there's accountability.
Right.
Yeah, no, it makes sense. And I see a couple of questions here that we got in the chat just regarding government jobs. So those companies that work with a lot of schools or government jobs, they get paid when the job is funded. So the question is, any tips on collecting quicker on the AR side when a project is pending funding, assuming that billing is doing their part with front loading pay apps where we can? Any ideas there, Luke?
Yeah, it's an interesting question because not all accounts receivable problems are accounts receivable problems, right? The question is, how do we collect sooner when working with a government entity that hasn't funded a project yet? Mm-hmm. Well, just to answer the question as it was phrased, you can't, right? You're not going to get a government entity to pay an invoice on a project that hasn't been funded. They don't have the funds with which to pay you yet. There isn't a way to get paid faster on that job in terms of the government actually cutting a check. So what you have to do, this is a business strategy question. It is a strategic question of what type of work are we going to pursue as a business? And if we are going to pursue government contracts, and we're going to end up in scenarios where sometimes we're working on projects that haven't been funded yet and payment terms are going to be delayed because of that, we just need to know that we have to have a capital structure in place that is built for doing that type of work and floating that type of work for a longer period of time, because we know it's going to take longer to get paid. Where we understand the cost of doing that, we understand the impact on cash flow of the delayed payment cycle, and we've built a strategy around how to do that work effectively, because you're not going to be able to go knock on a government door and get somebody to pay you faster.
Mm-hmm. Yeah, no, absolutely. And also there's some themes here in the chat today. Some questions that we're getting is really regarding retainage. So, how do you get retainage early for jobs that perhaps are lasting 1, 2, or 3 years? And is it acceptable to put restrictions in the contract? The other question's kind of related just about collecting sooner. So maybe you can address that for us.
Yeah, I don't want to hog all the Q&A here. So Kelsey, I would actually love to hear Kelsey's thoughts on that if she's willing to share.
Yeah.
To your point, Luke, you cannot force a government or federal project to release payment or retainage. I would equip yourself and enable yourself prior to having a conversation with the GC that's running this federal project. You could do it at the time of contract negotiations to just inquire, like, what do you expect the retainage timeline payout to be on this project? And then also add in, in my example, abatement and demolition, I'm the first person on the job. I don't come back. So I would then, make that case and state, hey, I'm the first one in. Can we come to an agreement that, say, 6 months within maybe 3 to 6 months after I'm completed with my work and my work has been accepted, can we have that conversation to go ahead and release retainage? I would check in on a frequent basis, every month or so to see, hey, is retainage going to be released soon? Can you have a conversation with the owner, knowing that, hey, you've accepted my work? I took stuff down. There's nothing to warranty here. You're going back up, vertical. So really just enable yourself for that conversation. Have your matter of fact information, as well as being very familiar with the contract and how that reads. So you can at least have that convo with your PM to make a case for it and at least request it. The worst thing you're going to be told is no or not yet. But, be confident and ask for it.
No, it's super helpful coming from someone who's been there for sure. So thank you, Kelsey. This next one, I'll go out to Marcos. I think during your session, you talked about this a little bit of multiple states and the complexities of liens. For those companies that are operating in multiple states, how do you suggest that they organize and manage filing these pre-liens and knowing that there's, going to be all these different rules and regulations?
Yeah, it's definitely a lot to manage. First piece of advice, again, understand the states you work in, set those calendar reminders for when your work starts and stops. But really, you could do this process in-house in terms of filing the actual pre-liens. There's tons of services out there that do it. Titan Lien Services offers that. And they can also help you with tracking those deadlines. Hey, you filed a pre-lien, is your work done? Kind of walk you through, okay, here's your deadline if your work is done. Really lean on those services. There's a number of them out there. You don't have to do it alone, and they're pretty reasonable. So as much help as you can get with such a complex, beast of laws to track, leverage as much help as you can get with that.
Yeah, no, that's great advice. And I think we'll end with you, Kelsey. Obviously, we talked about kind of a lot of things to do here in this webinar, and for someone who's really been there, like really what is the first thing that you think folks should do when they come away today and to kind of improve this entire process? Oh, I think you might be on mute.
My bad. Yeah. I would say if you don't already have a meeting set with your team that's going to happen between now and Friday, go ahead and get that set up. So that way you can, I would lead with, hey, I want to dive in and reconcile our billing processes here. And really go through that. Maybe you already have your finger on the pulse and you already are super familiar with your billing processes and you feel confident. Then I would say next, really focus and favor leading with a cash forward culture. In my experience, my best leaders are always communicating on at least a weekly basis, every single time we're meeting, what they're focused on. And I would address that focus that, hey, we're focused on billing. And you can say that in different ways. And you can also keep it fun by, like we had mentioned in our webinar, that keep it fun by motivating your team to be incentivized in some way and to compete. And just really build that cash forward culture. So it's something that when they come into work, they already know that this is an expectation. They already know it's very important. And I think that is where you start, is leadership, just constantly, reiterating how important this process is.
No, I love that, and that's a great place for us to end. So once again, if you want some follow-up conversations, feel free to fill out that poll to your right. Thank you, Luke, Kelsey, and Marcos, for sharing your insights. Incredibly valuable stuff today, so really appreciate that. And then thank you to everyone for joining us. Definitely stay tuned for an email from us. We will be sending out the recording of this, as well as a lot of resources. And so a lot of the SOPs and everything that we've talked about today, we're going to send out some workbooks, worksheets for you guys so that you can implement them in your organizations. So thanks so much for joining us, and we hope to see you next time.
Bye. Thanks, everybody.
Bye.
Thanks, everyone.
Thank you.